So I'm very very pleased to introduce Christian. Christian and I have uh, been in multiple initiatives together over the years, and Christian sits on the board at Nomi Network, is a founder of Hypothesis Factory, and is the founder of multiple businesses that have raised tens of millions, I think over 50 million, and he has been a part of getting over 8 million products into the market, product units. So without further ado, Christian, thank you so much. I'm going to give you the floor.
Awesome. Thanks so much, Danny. Yeah, it's been quite a fun journey. Danny and I actually met in Santa Barbara when he was starting his first hardware company. And as we know, hardware is just really tough. There's a lot of different spinning plates with these hardware business models. So we got to know each other pretty well. Um, and he and Mr. Price also helped solve some big problems, some engineering problems while we were at TrackR. Um, so I'm going to share my screen. Can I get some? Can you all see this?
Yes, we are seeing it and hearing you loud and clear.
Awesome, cool. Well, I won't be able to see you, unfortunately, with the setup, but this good afternoon, PDC. This is such a cool conference that we get to all share some of the wisdom and knowledge and learnings that we have as a community. Um, so I just want to introduce myself and tell you a little bit more about what we're going to talk about today. So I'll give a little bit of an introduction for myself and how I went from being a homeschooled kid who grew up in a box of Legos that hated sales. I hated everything to do with sales. Um, that then was able to, raise over $63 million in venture capital, and generate over 50 million in annual sales, and become an Inc. 45 fastest growing company. And I'm going to talk through some of those like mindset shifts and those realizations that I had, that really helped bridge that gap from not wanting to approach people, and really kind of understanding how to connect the other folks with what they are excited about in the world, with the products that we were building. And primarily, we're going to focus on how that happened, um, broadly with all of our customers, but also, how we translated that story to strategic capital partners, um, that came along board and really kind of helped fuel the growth, that we had created. So Hypothesis Factory really is an agency that it's a group of operators that go and we help second time founders to redefine their industries and really kind of be the operational partners that help solve and lift those initial problems. And a lot of those the learnings that we have are bringing are things that I wished I had, in other team members and consulting agencies, when I was starting my first company, which was a little project called TrackR. My co-founder and I had this terrible, terrible day surfing on when we were surfing at Pismo Beach. We had parked his car on the sand, gone out and surfed, and the surf was great. It was a beautiful sunny day, no wind. And after a couple hours, we came back in, only to realize his car was parked below the high tide line. So we had this moment of panic where we thought the car was going to get washed away and we would have been stranded on the beach because we couldn't find the keys. So as the water was lapping the front tires, we got so lucky that day because a man with a metal detector happened to be on the beach and helped us find the key that had fallen in the sand. And that's when we realized losing things is a really, really painful process. And so we set about to create these coin-sized key finders that could attach to everything. And then with a simple app, you could find them. We transitioned into building the world's largest crowd GPS community, and which allowed other users to help find their other things. So if I had, say, lost my wallet, another user who walked by my device would anonymously and confidentially tell me that they found that they had seen my wallet. And so I would get an updated location report. So we had tons of customers recovering stolen goods, laptops, wallets, bikes, through the system. Since then, um, more recently, as with Hypothesis Factory, helped execute some sales and marketing for a medical device company, and uh, took them from an idea to generating 4 million in revenue in about 4 months. And another one of the people who works with Hypothesis Factory led Sphero's retail growth. So diving in, what were those lessons that we learned from about the 6 different financings? We have, a couple at TrackR. I also made an angel investment in a company called Escape. They do robotic massage, and then also a company called Shine, which does automated bathroom cleaning. So across these 3 different projects, really kind of started getting a better sense of the venture ecosystem, and what fuels investors to actually put money into companies. So the key realization that I had when I was, a homeschooled kid who, when I had to go and sell popcorn to raise money for my Boy Scout troop, absolutely hated it. I hated going to door to door. I didn't like uh, approaching people and sharing what we were doing and why we needed it. I really, really didn't like it. But there in college, I had this realization that um, where I was able to reframe sales is actually service. And so sales is a really interesting way to help serve customers. And serving customers starts with knowing them. Well, in the case of venture capitalists, right, understanding the whole structure of how a fund operates and the different partners and who is actually putting money into the fund, was a big eye opener for me, because now I began to really empathize with the very challenging job that our potential capital partners had, right? The general partners who started these funds have a major fiduciary responsibility to the limited partners are funding them. And it's not just, maybe a really wealthy family or individual that's putting capital into these venture funds. It's pension funds, it's foundations. Um, there are some venture funds where hundreds of thousands or millions of people um, are impacted by the fund's performance, and that's just an incredible amount of decision making pressure that these general partners have to make the right investments. Um, Understanding how associates are working, right? The associates are the horsepower that really help the fund operate, right? And then there's going to be other kind of operational infrastructures, right, within those venture funds. So you'll have CFOs or you know controllers that are kind of making sure that capital allocations go through, that they're recording how the investments are doing so that they can report out to their limited partners. And then the portfolio companies, right, are that fourth component of what makes up a fund, right? Unless a venture fund actually deploys capital in exchange for equity, then, well, the fund doesn't really, it's just it's just a savings account. So understanding these fund dynamics kind of opened up a couple of really key and crucial realizations where the the venture capitalist is making a decision based on a couple of criteria, right? And they relate to all of the partners, right? So um, the venture capitalist has to report to their LPs. So if they're going to have to report to their limited partners, then what's the evidence that your vision is actually being created right now? That you're actually making it come to life, so that when they close a deal, they can, or they have to justify a deal to their other partners, they can point to actual evidence. And so I'd say this is finding what is that strategic piece of evidence that is necessary to generate in order to kind of win over win win the trust and like build that relationship, um, is kind of very very critical, because one, it allows uh, the proper relationship to get built, and a productive relationship to get built with the venture capitalist. And also it allows me as an entrepreneur to really focus on what is the small number of things that I should be doing in order to benefit my customers, and benefit the capital partners, and figuring out how to align, you know, what where to focus limited resources and time. Um, Another key factor is risk, right? If the deal fails, then the venture capitalist has to tell all of their peers, and all of the LPs that their deal failed. So coming up with a key strategy for how your company will actually improve with disorder is a critical factor, to kind of build the to build a great plan that investors can fund. Also, understanding what are those core factors that are driving your success, regardless of kind of whatever is going to happen in the market. I think that you know uh, a great example of market forces is smartwatches. Right? We had there was kind of this like interesting explosion of where a lot of people just wanted to know more about their health, and so a lot when that market was created, right, all the tides rose. Cell phone cases that were the same way. So what were those market forces that just kind of increase the chances of success for your industry? And then optics, right? um, it's important to think about how the deal will look in the venture capitalist portfolio, because uh, the venture capitalist job is to actually go out and then raise additional funds, right? You'll have typically like multiple fund vehicles where they'll raise anywhere from 20 to 100, 200, sometimes a billion, in a single fund, and then deploy that fund. So the optics of the existing deals, how is that going to improve that venture capitalist reputation? And so really empathizing with how the capital partners are thinking about these different deals was just a huge game changer in the conversations and how productive they were. It made it from being changed it from being transactional to where now my company could actually help a fund, even though they were giving me capital. Like now I had something that I could do to serve the people that the limited partners and the pension funds that were uh, you know going to believe in what we were doing. And so along those four decision points, the most powerful storytelling mechanism was creating the tension between what doesn't exist and what does exist. And so the world as it is today, right? We have this kind of current reality, right? We would for TrackR's paradigm, right? Everyone loses their keys. There's no way to keep track of your keys. You can leave them on the beach. Your wallet can slip out of your pocket on the bus, and you would never get it again, right? That was the world as it is, and the world as it could be was our technology, and it would create a world where you could never lose an object. And so defining that game changing shift that your technology clearly brings to the market, um, and then going back to, you know, point three, this is the market, this is the number of people that lose their keys, right? This is the number of people that need to keep track of their keys. Is the number of people who have smartphones. And then, if what would the world look like with those things? And so by bouncing back and forth and creating the tension between the world as it is and the world as it could be, right, it leads to the final vision, which would be the end state, right? That by the capital partner or funding your deal, then together the capital partner is the hero that's making this wonderful world possible. And in making that wonderful world possible, what's the liquidity event that happens? And then, what are the risks in getting there, right? It's really important to be um, clear about the perils of this journey, about getting to that final vision. And the clearer and more well planned the whole story and structure is, then the more likely I've found to have the capital partner come on board and uh, fund the deal and write a check. And so in hardware, within a bunch, there's call it more than 12 different financings that I've seen as like either participated in as an angel investor or kind of mentored founders through as a part of Hypothesis Factory. There are kind of two frameworks that apply most specifically to hardware. Um, and these are the overarching narratives that really fuel the, the the story and get investors excited. Um, Let me just throw out the disclaimer: raising money in hardware is incredibly difficult. There are more headwinds because the business model is complex. It's where there's inherent risks with supply chain. Margins are different, right? And um, which causes uh, less the lower gross margins allow don't make or it makes it more difficult to navigate different market conditions, right? So if the market or fluctuates, fewer customers, the price of the cost of goods goes up, then what happens to the business model, right? It's those slimmer gross margin models tend to be a little bit less, more difficult to navigate. Um, so in the business to business scenario, what we saw with companies like Escape was we have this really clear tech problem, right? And it has hard edges that essentially the equation is if we solve this proven need and having that need be irrefutably proven um, for the to show a venture capitalist is that's step one, right? And then proving out the tech, or at least the proof of concept of the tech, um, and having the getting the investor comfortable with making this technical bet is really, really critical. And this is, I think, what makes hardware fundraising extra challenging, right? Is if an investor has maybe only built software before, and then they really might be disinterested in uh, investing in that technical problem um, that they're less familiar with solving because it's hardware. So clearly defining how hardware is just software wrapped in plastic um, is, I think, a very, very important piece that the investors need to be comfortable with. So then also, what's that big payoff, right? So if we solve X with, then what's that? What are the payoff dynamics? So for Escape, right, we have this robotics problem, or that we have this giving an anatomically accurate massage. If we can do that, right, with robotics, sensors, and machine learning, then we can take 40, about $50 billion in annual revenue and transition it to our platform. And so just having that really clear dynamic of we're going to replace uh, and augment the physiotherapists that are can only be physiotherapists for a limited amount of time because they or massage therapists because their bodies wear out. We're actually going to be the robotics platform that fixes that problem for them. Really like that clear story, um, and being able to actually give an investor a it, well, yeah, it looks like you're going down with a car assembly robot arm. Give an investor a Swedish massage, right? The ability to demonstrate that tech and unlocked multiple rounds of funding for Escape. And then on the direct to consumer side, Shine Bathroom was a great example of really like what is one of the only ways that consumer hardware companies are raising money, which is complete market domination. So the things that the investor needs to believe is that the hardware company will get 70% of the market share. And there's significant long-term value every month, every year, your customers are going to keep paying you. And then that there's a depth of the market, right? You will continue to be able to acquire customers over a long period of time while the cost of customer acquisition stays steady, right? We don't want it to spike and become impossibly or unprofitable to acquire customers. And then you also have this competitive moat. So nobody else can really knock you off, right? These are, patents, deep tech, network effects, and some of those other things that would just prevent and differentiate, further. Peloton differentiates through content, right, and community as well. Um, so we see those are like, these two key frameworks to really help customers or to help your VCs, connect with the concept while at the same time, like clarifying the focus of what to do with the customer and the product. So now we can open it up for some Q&A.
Sorry,
If
there we go.
anybody has any
Thank you
questions.
so much. Yeah, it's actually going to be somewhat difficult to do Q&A in this environment. So what we can actually do is um, set up.
Over chat
Yeah, actually, that is a
or
great way to do it. So if anyone would like to message Christian with a question, you can hover your clicker over Christian's video feed, and then click the message button, and we can do some live Q&A here for 3 minutes until our next talk. And Christian, just to start here. Oh, I think there we go. Perfect.
yeah,
There we
you were saying?
go. Just to start, I wanted to say thank you very much. It's a fascinating journey and a fascinating insights about raising VC rounds from someone who's done it multiple times. So thank you very much.
Check it out.